The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
A warm welcome, ladies and gentlemen, dear friends, from wherever you are watching this last episode of our Focus On series for this year. After another year of pandemic and disruption has come to an end, we will want to look at what the future will hold. Not only negative things have happened, and we don't expect only negativity in the year 2022, much to the contrary. We have seen also quite a few positive developments, not only economically, but also in terms of sustainable finance in the area of digitalization. And these are exactly the topics that we would like to address with our industry leaders today that we have gathered in our panel, as well as with one special guest whom I had the pleasure and honor to interview separately some time ago. We are going to try to make sense of what is to be expected of the year to come. And to start with that, let us now turn to the pre-recorded interview with Yves Mersch, former member of the Governing Council of the European Central Bank. Good morning, and in this very first part of our program today on Focus on 2022, we are going to look at a number of different themes, issues, challenges and opportunities that the financial industry will be facing in the year ahead. And who better to do this with than somebody who really has an all-round view on the financial industry. I am very glad and honored to be joined today by Yves Mersch. Yves Mersch is certainly very well known in financial services circles because Mr. Mersch has been a member of the executive board of the European Central Bank from 2012 until last year, 2020. Before that, you were of course, the governor of the Luxembourg Central Bank from its creation in 1998 until 2012 when you were appointed to the ECB. And before that, you were a long-serving civil servant in Luxembourg's Ministry of Finance, including a stint as the director of the Treasury in Luxembourg. You're a trained lawyer, graduated from Paris Sorbonne University, and With that, Mr. Mersch, a warm welcome here to focus on 2022.
Good morning, and thank you for having me.
So, we will be looking at different topics from COVID and the ongoing recovery to where is Europe today, the green finance revolution, as well as the future of money. Let me start maybe with COVID and ask you, what were the main lessons that you think the financial industry should learn or take away from this crisis, especially in terms of resilience?
Well, first of all, I would say that the COVID crisis has shown again how little we know about the economy and how it reacts. But on the other hand, it has also shown that a common response among all European countries and a common response among different policymakers, monetary policymakers, fiscal policymakers, has increased the resilience of the economy to a point that we are all surprised now by the strength of the rebound, and that in most of the world we are today already above the levels that we reached in GDP before the crisis started, except in Europe, where we expect to reach this level by about the end of the year or the first weeks of next year.
So are we out of the woods yet in Europe? I think a year ago everybody was fearing a tsunami of defaults, and this looks today, if you look at the way banks are dealing with provisions, as something that has a fear that has abated somehow.
No, I think we are looking forward in a rather optimistic way for a simple reason, that is, as I said, the policymakers on the monetary policy side has reacted very forcefully with providing the banking system with ample liquidity, and the risk, the credit risk, was also alleviated from the balance sheet of banks through state guarantees, so that there was a certain socialization of risk. And that allowed the banks this time around to be not an amplifier of the crisis as it happened in 2008, but a solution to the crisis insofar that there was no credit crunch, and that the volume of credit to the economy continued to be ample at very favorable financing conditions. And that's different from last time around.
Okay, and the exuberance that is taking place or that is felt in the markets, how can we understand that? Stocks are up through the roof.
Well, I would say we have some dichotomy between the stock market's exuberance and the bond markets, because the bond markets, they of course, they see that for the moment there is still, in terms of real rates, a continuing decrease of rates. And that, of course, is bad news for the margin of the banks. The stock markets, looking forward, they believe in continued supporting measures from the public sector. And maybe one is too pessimistic, the other too optimistic.
Good, but let's come back to rates in a few seconds. First, the risk, the inflationary risk, how do you judge its importance going forward? What do we need to expect in 2022?
Well, I would not be surprised if the continuous revisioning of our expectations of what the economy will be and what the inflation will be will continue also in the future. We have seen in the past that the ECB has already needed to revise both of its forecasts upwards, and we have also seen that the inflationary impact seems to be more protracted than was expected at the first moment. So what we need to look very carefully is whether what is now from the central bank's perspective seen as temporary factors which would allow to look through and not to take them into account because inflation would be abating by itself over the course of next year, and even in 23, which is the end of the horizon of monetary policy, it would be back to something that the ECB now foresees at 1.5%.
But are we not seeing more and more economists saying this is not as temporary as one would have hoped?
And that is where I would say a central banker should be highly alert, because the central bank has only one mandate, one primary objective, and that is to maintain stable prices. And if we would see that there will be secondary effects and a general increase in the level of prices, not only due to some temporary factors, due to VAT in Germany now falling back into normality, also energy prices which are foreseen to come back to lower levels. A third element would be that disruption between supply and demand, because the supply has underestimated how fast the demand was surging upwards, and there was not sufficient capex available. But this will, of course, because we have credit available from the banking sector, this will adjust. If that would be adjusting, then the price increases would be temporary, and they would fall back to lower levels in the future. If that would not be the case, if there would also be structural factors that would affect the global chains, and if the adjustment to nearshoring or onshoring back would not go as smoothly as is foreseen, then of course we would have more permanent increases in prices. Another factor where we are not sure how it will work out is savings, because if the price increases will be met by a lowering of the savings rate, it would not need to be necessarily an inflationary factor. If that would not be the case, however, the risk of more permanent price increases would increase, and above all, I think central bankers will have to look very closely at future wage developments. If we would have, like there are demands, for example, in the largest economy in Europe, in Germany, 5% increases, then, of course, that would have to trigger a response from the central bank.
And what do you expect in terms of responses from the central banks, the European, but also the Fed or the Bank of England? Will they be slowly tapering?
The central banks are very cautious by nature, and they were very intent not to derail the recovery, which by and large still has some uncertainties and frailties. For example, how strong will be a fifth wave, and how will be the adjustment in the economy, how will be wage developments? All these are unknowns. And depending on that, the central bankers would not like to be responsible for putting off the rails the strong recovery. And for the moment, if you look at the end of the projection horizon that are being published by central banks, they believe that the turning back to levels of slow growth, as it was the case before the COVID-19, is still their main scenario. We don't know what will be the effect on productivity that has happened through changed working patterns, as for example remote working. All this does not allow the central bankers to go for abrupt measures that would derail the economy. On the other hand, as I said, central bankers have one main objective, and that is why they are independent and why they exist next to the policymakers, and that is their only focus on price stability and fighting inflation.
Good. Thank you very much for this, but let's turn maybe now to Europe more generally. You mentioned before that one of the strong points of the response to the emerging crisis last year was the fact that it was a common response. Europe has indeed really acted together, and one of these actions was the Recovery Fund. This Recovery Fund and the issuance of debt by the Commission on behalf of all member states has been described by some as a real Hamiltonian moment. Do you agree with that?
No, I do not agree. I think that's a hype that is not appropriate. Let us not forget, first of all, what is Hamiltonian moment. That is when the northern state assumed the debt of the southern states, and that was also the legacy debt. And we are not in such a position in Europe. We are still, in many countries, strongly resisting to take over the debt of other countries that was accumulated in the past because of, let's say, insufficient orthodox fiscal policy. What we are doing is an act of solidarity, and that is putting together a debt for future investment, for investment in productive purposes, and not for past debts to finance current accounts or to finance current expenditure. So from that point of view, I would not join the chorus of hype to say this is Hamiltonian. In order to have a Hamiltonian movement, to have joint issuing of debt or Eurobonds, I think we would need a much stronger carcan or much stronger stability and growth pacts. We would need to give up sovereignty in the national budget. This would, in some countries, require constitutional changes, which would need to be adopted in parliament through constitutional majorities, which in some countries would mean a referendum, in other countries a reinforced majority, which in many countries does not exist.
Okay. Brexit has, of course, also been a topic that has kept Europe busy for the last 5.5 years. Maybe less than the UK, but still busy, and is still something that is unfortunately flaring up regularly around Northern Ireland and so on. What do you make of it for the EU's financial services industry? What has it meant for the EU's financial services industry looking forward?
Some activities have relocated or had to be relocated. But by and large, if I take a step back, I would say the amount of relocation was not that much important. And that shows also that in matters of finance, you don't use regulations. You cannot have a fiat saying you cannot do this in this country and not in another country. Finance is going after the best. And it is competition that rewards the best. So to some extent, we are still depending on some infrastructures which have not relocated from the UK. And we have to make the best out of it. We have to try to nurture our own industries, try to make them better, before we will see activities moving from London to the continent. And for the moment, the competition between countries inside the continent is certainly not helping in this regard.
And how will we build with London a mature working relationship that puts Europe at the top of the global financial industry?
Well, I would say the policy side is for the moment not very helpful. And on the other hand, the contacts between the central bankers have been quite good throughout the crisis, before the Brexit and also now after the Brexit. There are numerous contacts. And we try to minimize the fallouts that come from the policy side. But unless we manage to have a more general, overall, better working arrangement with the UK, it will be difficult to have the financial services taking the lead for closer cooperation.
Brexit has also been a wake-up call for the EU in terms of building its capacity, as you said, and more generally the capital markets union, because we have realized that actually our financial services institutions' capacity is dwarfed by that of, for instance, their American peers and increasingly also their Asian peers. The European banks or asset managers are taking the regulatory burden that they say they suffer from since the last crisis as one of the explanations of this loss in competitiveness. How do you see, where do you see the reasons of the dominance of American banks or other non-EU banks and asset managers globally?
Well, I would first put it straight that it is the European banks that are the main lenders for the European economy, because Europe, contrary to the US, is still mainly financed through the banking system. 80% of all economic activity is bank financed, and in the US it is 2/3 of the activity is market financed, because simply there are bigger entities in the US, while in Europe we still have a lot of small and medium-sized companies in many of our countries which cannot have access to capital markets. And that is one of the reasons why we also want to diversify from an excessively bank-centered financed economy to a more diversified financed economy through capital markets. But unfortunately, capital markets seems to be confined to Sunday speeches, and we make very little progress. We have not even fulfilled the banking union. We do not have a deposit guarantee scheme. So you see, we should continue what we said we would do, and the promise for a banking union is already quite old now, and it would be about time to fulfill it. Once we have the banking union, then we should also increase the diversification of sources of funding and be much more focused on capital markets union. But that are only wishes. I hope that our decision makers will be able to take this up. In the end, it also means that if we have more capital markets union, we need more Europeanization in the capital markets, more responsibility for a European institution, and less sovereignty and less national interference with asset managers. One should be aware of that, and that is the reason why we are not making large progress.
Europe has been, on the contrary, leading in one area in particular, and is very proud of that, and that is green finance, through the creation of a comprehensive regulatory framework around the taxonomy and the sustainable finance disclosure regulation. Our American friends are not at the same level, at least in terms of regulation, and indeed probably never will be, because if I judge on the basis of what I've been told recently in the US, they will, rather than a top-down regulatory approach, prefer a market-based approach, where maybe the SEC will impose more requirements in terms of transparency, but they will certainly not put a straitjacket on the industry, as they say the EU has done with the taxonomy. So which one is the right one in terms of approaches, the regulatory one or the market-based approach?
This is a permanent discussion. I would say that even if we have some regulation, it is still quite high level, and it does not give the level of certainty that would be required to be on the safe side. Let me ask you simply whether you are able to tell me whether the nuclear industry is part of the green, or only the green transition, or not green at all. We do not have an answer to this. And there are numerous questions that are unresolved in this respect. So yes, we have some very general taxonomy rules, but whether they are sufficient, we have seen that they, above all, nurture a sound debate among people who promote greenwashing. And my concern is that a certain amount of what is now being considered as green products will have no reason to stay on the books in the future if they prove not to be green anymore. And that could be a risk in itself. That is why I believe we should be very careful with future credit risk, market risk, because our green economy, we know where we want to be in the end. But the transition raises enormous questions, and we only now begin to awake to the price of transition. And that is one also of the inflationary pushes that we have been seeing, because it shows that the transition to a new standard comes with an increase in prices. No one wants to invest in the old industry anymore, but we still need the old industry to run our companies and to run our machines. And that's why the prices go up. So we should be aware what we want. And all in favor of having a clear aim, and I think that we have. But we still do not have a clear path to how to get to that aim.
We all agree that we are at the beginning of a process, and some, and I think they are right, say that the speed is relatively slow, probably too slow. But we see speed picking up, in particular in capital markets activities and as well in the asset management industry. One sector of the financial services industry that is lagging behind is banking. How do you explain the delay in the penetration of sustainable finance within the banking industry?
Well, the banking industry needs certainty. And as I just said, the certainty is not yet there. And the banking industry is regulated at European level and supervised and under the control at European level, while the asset management industry is still under national supervision, and the national supervision is not reacting in one country like in another one. And in some countries, products are accepted as green, which would be rejected in other countries. And that's why there has been a transfer of risks outside the banking system into the non-supervised or less regulated area of the non-banks. And this is the ongoing discussion that we still have, and which I said, if we want to have a capital markets union, we cannot have national supervision of capital markets.
Let us turn now to another topic that I know is very dear to your heart and in which you are very interested. That is the future of money. The ECB, also already when you were part of the executive board, is looking into a digital euro. When will we be able to use such a digital euro, if ever at all, and what exactly will be the consequences, in particular for banks?
Those are the questions that are for the moment under discussion. What is already known is that this will not be a regulation or a decision top-down, but it will be a decision by the users of money, by the consumers. Let us not forget that there has always been private money next to public money. But private money only existed under three conditions. One, it was issued through banks because of bank deposits. Second, the banks were on counterpart heavily regulated. Third, they needed to put a lot of capital aside, and the capital requirements have been even increased after the 2008 great financial crisis. And fourth, we had deposit insurance. That is allowing to convert private money at any moment into public money, and public money is entrusted into a public institution which guarantees the stability. And that is creating the confidence in the public. This is the scheme that will be maintained whether public money will be paper or if in the future it will be under a digital form. Now, it could be that the central bank would simply say, we do away with private money. But that would create a loss of bank deposits, because people would prefer to have central bank deposits, and that would then increase the funding cost of the banks, increase the cost of credit, and lower the cost of financing, increase the cost of financing our economy, and lower the volume of credit to our economy. So that would be counterproductive. That we need to avoid, especially in terms of a run on the bank. Everyone would take his money out of the bank and put it with the public central bank. As we have seen in 2008, I still remember, some people called me and asked me to have a deposit with the central bank. And I said, sorry, we work with the banking system, because the banking system transmits also the monetary decisions. Now, obviously, it is, as I said, the user who will decide. We have seen a very slow erosion of the use of cash. In some countries it went a little bit faster, like Finland, Holland. But in most countries, the majority of transactions are still being done in cash, especially smaller amounts. And let us not forget that if people say, I use my card, the card is usually not a European card, but a non-European instrument of payment. So I would suggest that we would finally try to get our European banking system together to offer a European-wide card, which would make it more comfortable to use this payment system, which is a private payment system. The central bank, if, however, it would see a diminution of cash below certain levels, it would need to offer the public an alternative which is as stable, as safe, and as trusted as cash. And therefore, the conditions, in my opinion, should be not too far away from those of cash, because otherwise you would have two different currencies issued by the same central bank, and that would be creating trouble and insecurity. So these are the ongoing discussions. You know that the European Central Bank has decided to launch the investigation phase where they will examine what are the features of central bank digital currencies, what would be the different instruments being used, how will it interact with the banking system. And in the end, it will submit a project where there will be a very broad consultation with all interested parties as well. The reason is we as central bankers must be ready. But it is the public who decides when it will be implemented and when it will be implemented and with what features and what particularities.
And if implemented, what would that mean for decentralized finance? I don't know if it's a rhetorical question to ask a central banker what he thinks of decentralized finance, but where are the likes of Bitcoin and other virtual currencies headed?
As I said, Bitcoin does not represent anything. There is no central authority that takes responsibility. It is a for-profit organization as opposed to a central bank, which is a public institution. So if people use these private institutions, it is like using a bank which is not supervised, which is not part of a deposit guarantee scheme, which does not need to retain capital for each loan that it, or for each currency unit that it issues. So this, of course, are a huge risk that's private users would take. And if there would be a scam or if there would be a failure, they cannot go back to the public authorities and claim for compensation because there is no authorization, there is no involvement of the public side. So from that point of view, I would say all these virtual currencies, they exist outside the central bank world, outside of trust, outside of supervision and confidence. And I can only warn people, this is a speculative instrument. Your question was decentralized finance. Decentralized platforms can be quite efficient. And I think they will be spreading. It is one of the risks for banks also, because some of their activities cannot be done on a standalone basis because of size. So decentralized finance will come. What will not come is that decentralized finance means that the central bank outsources its own accounts to private entities. We have never done it, and this has always been a red line. I believe this red line will remain in the future, and I do not see how we would give access to a non-bank institution which is not under supervision, which does not participate in deposit guarantee, how we would get access to our accounts and how we would provide lender of last resource facilities in such a situation. I think this one can already say today, but that we are exploring already some years ago, we did such exploration among central banks of decentralized finance. And I think that's part of the innovation and of the evolution, and central banks must be part of innovation.
We are, as we discussed before, coming out, hopefully, of the COVID pandemic. And a number of commentators have said that much worse than the pandemic, a disruption could come from a cyber attack or several cyber attacks. How ready is Europe's financial industry for such a cyber attack?
Basically, the cyber responsibility is still coming in most countries under national security, which by virtue of the treaties remains firmly in the national competence and outside the EU competence. However, we are also quite aware that in practice, nationalities are no hindrance to cyber attacks. So we need stronger cooperation at European level. The Commission is trying to push forward, but this again is a matter where we have to overcome what is still possible under the present treaties. How can we put some sovereignty together? How can we share sovereignty? And you know that in Europe some countries are more keen to do that than other countries. So this is part of the European way, very slow because we are so numerous, and the cyber attack is not something where we can only rely on purely European exchange of information. We need also exchange of information with, I would say, nations that we consider as more friendly than others. There are, at the level of central banks, working groups within the Basel system that look into the matter. We have also some informal contacts with our counterparts in the UK, with England, Canada, Australia, and so on. We also mention these issues when we meet our counterparts outside this small circle I just mentioned. So by and large, we try to increase our resilience, but the resilience is only as good as the weakest chain of it. And as long as we have globalized chains, we need to work together in order to avoid an attack on the weakest link in this chain.
Let me ask you one last question on the future of financial services, more generally than money. big tech firms, whether it is Facebook or Amazon or Google or others, when will they replace financial institutions, whether it is banks or asset managers? When will they step into it for good? Some have already started in the payment area, but when will they up their game on this?
They could do it at any moment. They only might not yet be sufficiently comfortable with their knowledge of managing risk, especially credit risk. But they also are hesitating to confront the regulators head-on, because this would be a very strong attack on the public system. Because if the banking system would be weakened, the transmission of monetary signals to the economy would also suffer. And therefore, central banks have a very tight oversight of who is entering the banking system and how the transmission would continue to work. And as I said just now, in the payment systems, they might offer some solutions, but as I said, these solutions are highly risky, and there will be no lender of last resort. And from that point of view, either they will have to adjust with some kind of oversight or regulation or supervision in order to compete hands-on with the banking system, because otherwise we would have a weakening of the banking system with one hand tied behind the back, and on the other side we have these GAFAs who could do whatever they wanted. Second, you see that the role of those big tech is already beginning to be questioned whether they can be maintained within one corporate entity, or one would have to split them up into several entities. So the discussion has started, and it is no more a one-way discussion where the big tech could do whatever they wanted because they have the sheer might of the number of customers, which is much larger than the number of customers of banks, and where they get the information on those customers, which would allow them to shape their credit lines to the different customers. So they have huge advantages, but in order to roll them out, in order to move front-on, head-on into competition with the banking system at large, I think there are still some hesitations, and there would be a regulatory backlash, I believe.
Before we come to the end of this very fascinating interview, let me ask you two more very short questions. First, what is for 2022, in your opinion, the biggest challenge facing the financial industry?
I think challenges are twofold. One, the banks have sailed through the pandemic, as I said, rather not comfortably, but rather unharmed, because they had the guarantees from the governments for the credit risk. They had the liquidity provisioning at very favorable conditions from the central bank. And the low interest rate was to some extent compensated by an increase of the volume of credit that they could extend during the crisis, because the risk was taken over by the government. So for me, that is a risk, because it's a model that cannot continue. The public measures will be phased out, both from the central bank and also from the government side. When exactly it will happen, it's difficult to foresee. As I said, the central bankers are cautious, but I think there will be, it's fair to say, there will be not an increase in accommodation from both sides, because that is not warranted. On the fiscal side, the measures will probably be much more focused in order to diminish and diminish. And on the central bank side, there will also be a certain reduction of new measures and a maintenance of the existing measures only to the extent that the increase of inflation does not reinforce these measures. Otherwise, there would be an increase in accommodation. And that is certainly not warranted. So there will be a certain, in my opinion, I would not be surprised if there would be a certain adjustment. You have heard that the president of the ECB has already mentioned that the pandemic might probably be stopped, measures might probably be stopped by the end of March. Whether other measures will also be in the discussion is a matter of the very forthcoming decision-making meetings. But during 2022, one can foresee that if we continue to have strong recovery and, on the other hand, also an increase of prices in a more durable way with high outcomes of wage negotiations, then inevitably there will have to be a reaction function coming in according to the pre-announced strategy of the central bank. But for the moment, this pre-announced strategy has three different criteria which are not fulfilled for moving to the next step.
And to end on a more cheerful note, what do you see as the biggest opportunity for the financial industry in the year to come?
Well, as always, the biggest crisis is the biggest opportunity because it reveals existing weaknesses and it allows a reaction to change and the business model in order to focus it on the most profitable area. Because one weakness of the banks is that they have in Europe insufficient profitability. So we need consolidation at the European banking system. We need also a focusing of the business models. We need cooperation agreements as well. And we probably need also a higher amount of cross-border activities. But this presupposes that we will finalize the banking union, as I had said at the beginning. So this is absolutely important also for the competitiveness of our banking system, that we finalize the banking union as has been promised.
Mr. Mersch, we could continue, obviously, for quite some time with this fascinating discussion, but we will unfortunately have to end it here. I hope that we will be able, on a future episode of Focus On, to have you back as a guest. Thank you very much for sharing your very, very deep insights with our audience. You could hear certainly the central banker speaking, calibrating and weighing every adjective, placing the commas exactly where they needed to be placed in order to avoid any misunderstandings. So thank you very much. And now we will come to the panel discussion with experts to look back at some of these issues, but also some others. Ladies and gentlemen, thank you very much, Mr. Mersch.
Thank you very much for having me.
And Happy New Year.
And the same for you. Thank you.
Well, I hope that you will agree with me that this was a fascinating discussion with Yves Mersch, whom I, of course, wish to thank again for his time in discussing these points with us. And now we will turn to a no less fascinating discussion on similar issues, some of them even the same, with a panel of distinguished industry leaders. And I am particularly pleased to be joined from London by Joanna Cound, who is the co-head of Blackrock's Global Policy Group. as well as a member of their Executive Committee for Europe. Joanna is a long-standing professional from the asset management industry, where she has worked first at Fidelity, then at Merrill Lynch Investment Management, and of course in 2006 that became part of Blackrock, where she is today still one of the pillars in Europe. Joanna has been educated at London's Business School as well as at the prestigious College of Europe in Bruges. And here in Luxembourg in our studio, I am joined, let me start here on my left, of course, with another lady, Alberta Brusi. Alberta is the country head for Citibank here in Luxembourg. Alberta has been with Citi, and now I'm not revealing anything indiscreet, but she celebrates 25 years at Citibank this month. I hope that her colleagues and especially her superiors are showing their appreciation for this loyalty with Citibank. To my left, further left, is Yves Nosbusch, who has already taken part in last year's focus on 2021, and I'm very glad he could join us again to give us a bit also of the comments on how he has seen with the hindsight this year. Yves is a member of the Executive Committee of Luxembourg's part of the BNP network, Banque Générale de Luxembourg, BNP Paribas, as well as their chief economist. He holds a PhD from Harvard University and a master's from the London School of Economics, where then also he has been on full-time academic stuff, teaching there. With us also is Bock, who is a serial entrepreneur. He is the founder of an investment platform called Investre, which is dedicated to investing in sustainable investment funds. He's also partner in other startups, fintech startups, and board member for others. He is looking back at a very long career in consulting, where he was nearly a lifelong at KPMG, of which he was also the managing partner for 4 years from 2012 to 2016. So you see, we have brought to you quite a cast of experts to look back at what the issues are that we are facing for the year ahead. And maybe we could start with getting our panelists' comments on what Yves Mersch has said. There is plenty, of course, to chew on, but I think that each and every one of you probably has one or the other point that they would particularly like to comment on. And why don't we start with Joanna in London? Is there anything that struck you with this? I am told that this doesn't quite work for the moment, so let's turn back here towards our colleagues in the studio. Georges, why don't you give it a go? There was plenty on technology, and I'm sure you are burning to comment on some of that, and probably very frustrated you can't comment on all of it.
No. But let me maybe comment on one thing which I believe is key, is going to be key for the financial service of the future, is just the central bank money, so the digital euro. And digital euro is needed for blockchain to develop its full power for financial services. So that's why it is a key element on making the financial services coming to the next generation. And let me express a wish. First, the wish is to say, like Yves Mersch spoke about the public.
It's Christmas time, you can express wishes.
Yeah. So I hope that when he speaks about the public, he does not only speak about banks, but also he includes in that public the fintechs, the companies, and the real consumers when making the claim for the digital euro. Now, I believe there are already signs for that claim for the digital euro. If you take the 3 biggest stable coins that have been issued and you add them up, the market capitalization is 140 billion euros. And I think the question is not are there signs, but rather what is the threshold to get into action?
Alberta, what struck you from the points that Yves Mersch has made in particular? Is there any point you would like to highlight?
I would, Nicolas, thank you. I think Yves said very elegantly, 21 months into the crisis in Europe, to the COVID crisis in Europe, financial institutions have indeed demonstrated that they are part of the solution to the crisis and not an amplifier. And I think that has been amply demonstrated. And we will also be critical to governments, to companies, to individuals in coming out of this pandemic and the impact it's had on the global economy.
Definitely. I think that if there was one thing that has definitely been underlined, it is the role that the financial services industry, the banks, of course, which you represent, but also the asset management industry, and the digital part, which Josh here stands for, have really contributed in allowing us all to come out of this crisis, whether it was through the investments they made, whether it was through the solutions they found, or whether it was through the help that they gave companies in prolonging loans and so on. So that definitely was a very, very positive thing coming out. Now I'm trying to see if we can reach our other panelist. Joanna, can you hear us and can we hear you?
I can indeed.
Wonderful, excellent, good. Have you any points that you would like to underline from what Yves Mersch has said? Anything that struck you in particular?
I think I would like to underline the point he made about the power of the fiscal and monetary response taken in response to the COVID challenge. This was a real departure from the practice that we've seen over past decades, which basically separated monetary and fiscal policy. But it was totally needed given the size of both the demand and the supply shock. And I'm flagging it because I think in Europe we need to go further on this path. We're going to see next year the government's talking about how to reform, whether and how to reform the Stability and Growth Pact that Yves mentioned. It's very clear that if the current policy is implemented in 2023, it would derail the recovery and it would harm the Next Generation EU's attempts to move towards a sustainable and digital Europe. And it would also make life more complicated for the ECB with its monetary accommodation. So we'll see that discussion happening. But I think also we need to not look at the Stability and Growth Pact in isolation, but we need to work further on trying to see how fiscal and monetary policy could work together better, given the more constrained policy area each has. We'll need this for the recovery, but I think we'll also need this. I know we're going to come on and talk about sustainability later. We'll also need to consider whether and how sustainability or climate policies should play a role in that mix. So I wanted to highlight the importance of the Stability Growth Pact, getting that policy mix between policy, monetary and fiscal policy right, and then thinking on the on climate policies, whether to integrate those into that thinking or not.
Absolutely, and I think that our colleagues from the French government for their EU presidency have definitely also selected this as an important topic to discuss on, especially with the new German government. Let's see what will come out of it. But as we are already on the economic side of things, let me turn to Yves and pick your brains maybe on what you have particularly, what has struck you from what has been said in the interview.
Yeah, so one of the questions that Yves Mersch touched upon, which I find really fascinating, is what's going to be the medium to long-term effect of the crisis on productivity? And I think it's true that we don't really know the answer to this yet, And there are, of course, lots of aspects to this question. But I think one area that I find particularly interesting is, and I think for which there does seem to be some empirical evidence, is that maybe we want, when we think about home working, for example, we want to think about different types of tasks. So there may be some tasks which we could maybe call business as usual tasks, for which productivity might actually increase through home working, whereas for other tasks that require innovation, that require exchange, innovative ideas, it seems absolutely essential to be on site, to be interacting closely with people in a physical location. So again, I think these are fascinating questions. I think they will determine how we organize ourselves in the future. And I think we do need a lot more empirical evidence to be really confident about that we will be taking the right decisions on these questions.
Let me maybe stay with you and let's dig a little bit deeper on the economic issues. The general consensus, as far as I can understand, is that there is a large degree of optimism. Your own group, banking group, has issued predictions for 2022, on which the cover was even a Highland bull, just to avoid any sort of misunderstanding from even looking at the cover where this is going. From the discussions that we have had with Yves Mersch also on inflation, should we really be optimistic? Aren't there too many risks on the downside, economic risks, geopolitical risks, or do you persist in your optimism?
So, I mean, we do expect global growth, in fact, to exceed both the consensus and also consensus expectation and also trend rates, both in 2022 and in 2023. That's at least our central scenario. I can maybe talk about risks a little bit later. So for the US, we are forecasting a growth rate of 4.7% next year after 5.5% this year. For the Eurozone, 4.2% next year after 5% this year. And even in 2023, we were still forecasting for the US 2.8% and for the Eurozone 3%, so all above trend. So we do think we are quite optimistic given the information that we currently have. We also, turning to inflation, we do also think that the rise in inflation will be somewhat more persistent than what is generally assumed. And more specifically, we think that the bottlenecks in the supply side will take somewhat longer to resolve than what most observers typically expect today. Now, it's true that most of the factors behind this rise in inflation are temporary in nature. So we have this large supply-demand imbalance. We have the rise in energy prices, and we have also some specific factors like the VAT hike in Germany, and these are all temporary factors. But of course, the longer the rise in inflation persists, the bigger the risk that it gets entrenched in inflation expectations. And so there, one key aspect is to look out for second-round effects. So for the moment, we don't see second-round effects, but certainly, if we start to see persistent increase in wages, for example, that would certainly be, I think, a game changer in the way we look at the inflation outlook. Anyway, as things stand, we expect the supply constraints to be largely resolved around the second half of next year. We expect inflation in the US to peak in the first quarter of 2022 at its highest level since 1982.
Which it already is now at, what is it, yes, 7%?
Yes. So we have even for the US, just to go, so in the US we have an inflation forecast 4.6% for next year after 4.7% this year. So very slight decline next year for the entire year. For the Eurozone, we expect 3.1% after 2.5% this year, so further rise in inflation for next year. And then we see things moving back towards the central bank targets in 2023 with a forecast of 2.1% for the US in 2023 and 2% for the Eurozone. So in summary, I think both our global growth and inflation expectations are above consensus. And so what does it mean for central banks? So we expect the first rate hike in the US around the middle of next year, a total of 3 rate hikes in 2022 and 4 rate hikes in 2023. And in Europe, in the Eurozone, we expect the first rate hike around the middle of 2023, so roughly 1 year after the first rate hike in the US. Now, of course, this is with the information we currently have. As you all know, central bank, the Fed is meeting as we speak. The European Central Bank is meeting tomorrow. So, of course, we'll be looking out for any new information, any new guidance that they might give us on how they expect to conduct policy. But that's, as things stand, that's what we expect.
Okay. And Alberta, is Citibank and are you yourself as optimistic as Yves is on this?
I would say that Citi and myself, we're cautiously optimistic. So I like the imagery of the Highland bull, but perhaps a smaller bull. But I do overall, agree. I think an important factor to take into account, though, and Yves Mersch had mentioned it earlier, is that there will be a readjustment, right? There will be a readjustment as, you know, central banks ease up on liquidity and as governments, right, start to taper off with the guarantees. And that will be, I think, a factor to watch in regards to 2022 and beyond, both for the European financial sector as well as the American financial sector.
Good. George, do you share in this?
Well, I think when speaking about the bigger economic picture, I think there's one thing that is very interesting, and that is then, okay, we speak about this growth. What is driving this growth? Is this growth driven by, for example, digital transformation, which, in my opinion, is key to this remote working kind of new organization. If we want to not to sit anymore in one place, we have to have the means to interact properly, quickly, and so on and so on. And on the one hand, I can see this driving a certain demand and economic growth. On the other hand, the fact that we have to transform normally is also meaning slow down a little bit. And so I'm really a little bit puzzled how this all fits together, like this transformation and this small disruption that this might also operationally wise be of concern, versus the increase of demand and the push of the economy. I think, but it's interesting to see that these figures are very high. Then these very high inflations, of course, are of concern. I mean, what is temporary, what is not? The French say, il y a que le provisoire qui dure. So one has to be very careful on this thing. So I think the real question is inflation. How big is inflation going to be, and what is the reaction of the central bank to that? And it's cut the engine.
Bring in here, Joanna, what is your sentiment for next year's economic perspectives?
I'll try and say a couple of things on the economy, but then move to what's the implications for markets. So I think we're broadly aligned, maybe not quite as bullish as some, but we definitely believe that the new virus strains may delay, but they're not going to derail a really strong uptick, restart in economic activity, that the central banks will not react they'll be more tolerant of inflation than in the past, so that even as supply chain difficulties ease, will settle down at a higher rate of inflation than we've had pre-COVID. And in terms of what does that mean for markets, last year was pretty extraordinary because we saw very positive equity returns and we saw negative real bond returns. Negative nominal bond returns. And given that this scenario will keep real bond yields low and be supportive of equities, maybe not to the extent that we saw this year, but still supportive, we could see another year of the same phenomenon. So positive equity returns, negative bond returns. And if so, that will be the second time in 50 years that we've seen that happen twice in a row. So the scenario is really supportive of equities, supportive of investments in private assets. So I think that would be our main conclusion of where we stand at the moment.
Good, but let me maybe stay with you while we're at it and look at what lies ahead of us in the year with the EU regulatory agenda, which is one of your main focus areas. What do you see as the main topics, the main construction sites that are currently ongoing?
Well, I think I'd start off by saying that in my view, at least for asset management, 2022 is going to be the most consequential year in terms of legislation that we've seen since well before the global financial crisis. Why do I say that? Firstly, the geopolitical developments that we're all living through. So that is the backdrop, and against that, we're seeing phenomenal amounts of legislation being proposed across virtually all sectors, whether it's asset management, markets, banking, insurance, AML, sustainability, digital. And they're all going to be viewed against that backdrop of the EU asserting its role in a changing geopolitical world. So assessed against geopolitical Europe, a strong Europe, a digital Europe, a sustainable Europe. So a large amount of legislation with a different filter than we've seen before. I think that's the first comment I'd say. At the same time, we have the policy thinking that started in March 2020 as a result of COVID, going through both the global and the regional policy formulation. So I would note that I'm very happy to note that the FSB and EU institutions like ESMA and others recognise that the vast majority of open-ended funds came through and performed as expected. There were some exceptions, a few suspensions, but these were limited and idiosyncratic and because of liquidity rather than credit issues, as in the global financial crisis. Also very happy to see a growing recognition of the importance of understanding the connectivities and activities within an ecosystem when trying to think through policy response. So they're both very positive, and next year we will see more work on open-ended funds. We think that will be largely around swing pricing, but yet to be seen. We'll see work on looking at the functioning of bond markets, that the entire ecosystem, on CCPs and margining. Money market funds, that the FSB has produced this paper, so that consideration will happen more at the regional and country level than at the global level. And I really hope that we look at the ecosystem there so that consideration is given to, basically in the EU, we saw the short-term funding markets seize up for several weeks, and they didn't in the States. So, understanding why that would be a good place to start. I want to finish with a couple of words on CMU and then sustainability. The Capital Markets Union Yves mentioned, in my view, that is now seen no longer as a nice to have, but really as essential to achieving the strategic autonomy, open strategic autonomy, strategic open autonomy. And the proposals that the Commission made a couple of weeks ago are really important stepping stone on that journey, whether it's achieving or proposing a consolidated tape for the first time, which means, for the first time across Europe, we'll be able to identify the price of a security. Issuers should benefit from lower capital costs. Retail investors should have the same access to information as institutional investors, and we'll have a single European market in that sort of data. So that's phenomenal. But we also saw other initiatives that will increase the opportunities for European investors to invest in different types of asset classes across border. So the reform of the LTIF should really sort of power that product and allow more both institutional and retail investors across Europe to invest in private assets. We saw reforms that are important to financial stability, such as making liquidity risk management tools available, member states making those available to asset managers across the union. We saw ESAP, so a single point of data for corporate information. And I could go on, but it really is an important step for, we believe. I'll finish off on sustainability. And this is finishing on another high note, I think, because we're seeing significant progress both at the global and the regional levels. Regionally in Europe, it's mostly implementation. We've got a really significant task for implementing SFDR, taxonomy, MiFID, sustainability, and others. But I think the really good news is that it looks like we will get interoperability on the core thing that underpins all these reforms, which is issuer data. So the ISB announcement was really important in getting convergence of standards and standard setters. Looking forward to the first disclosure on climate coming out mid next year. And in the EU, taking a very sensible approach with the CSRD. So that is sort of almost like a building block going over and above ISB where that is considered appropriate given the EU context. I would say that I think there's a big debate on double materiality and dynamic materiality. And I think in actual practice, there's far less difference than there seems to be in terminology. So as an investor, if we're looking at companies, we're looking at the impact that companies have. If you're investing in like a drinks company, you're looking at how they treat water, because if they're polluting waterways, then that will impact their valuation. And you can say the same for whatever the industry. And as we get more data through the CSRD and other initiatives, and as stakeholder expectations take into account more and more the impact of a company on its surroundings, I think that discrepancy between the two will be seen to be more in language than in reality. So that's it. I think that we have a huge task ahead of us. The debate has moved from the technical to the political as in Europe, these initiatives go through the legislative process. And I think it's important for financial services firms to engage at the national level and European level, looking at the impact of the policies on European citizens and issuers and the impact on the economy.
Well, thank you very much for that very clear picture of the substantial agenda that awaits the European legislators and thus also the people like yourselves who are following this very closely. There is one area, sustainable finance, that you have mentioned and where, as you rightly said, a lot has already been done, certainly at the European level. In the interview with Yves Mersch, we also touched a little bit on the two different approaches. The European approach, which some people, especially in the United States, would call a top-down regulatory approach, and then the more market-based approach by our American friends that are looking at not exactly copying what the European Union has done in terms of taxonomy, but other elements, yes, like the disclosure bit. This is maybe also a good point at which to introduce our first Slido question, and that is exactly based on this point, namely, is the EU's regulatory approach to sustainable finance the right one? And while you are going to vote on this, by scrolling down on the screen on which you are currently looking at this live stream, if you do not see the Slido option, then refresh the page, it will appear, and you can vote yes or no. We will revert back to this in 2 or 3 minutes, but maybe let's first get the comments of the other panelists on the regulatory agenda that Joanna has laid out here for us. And maybe let's get also the banking side by starting with Alberta. How do you see from the banking side? I think there are definitely also major points on the agenda of the legislators in the coming year.
Oh, absolutely. And I completely agree with Joanna's comments, in particular in regards to Capital Markets Union. And I would pick up as well Yves' point earlier in terms of banking union. And I think it's absolutely critical that there should be greater progress in regards to moving the Capital Markets Union agenda forward and the banking union agenda forward. Really, we are a significant cross-border operator, and we can attest to the value of international capital flows within an open market, and that openness of markets is going to be a key driver to Europe's growth, to Europe's future growth, and so I think that is absolutely very high on the agenda.
Another banking group, how do you see the regulatory agenda?
Well, I think that the legislation that we are seeing in Europe around sustainable finance and sustainability more generally is extremely important, and it's very important that we make progress on this, and it's very encouraging that things are moving forward. Having said that, I think there's also a risk that we have to be careful about, and so that this is not at some point going to be perceived mainly as a constraint rather than the incredible opportunity it is. And I think so I think we all have to be careful about finding the right balance between coercion and encouraging innovation and new business models in this area that will lead to more sustainability. And so ideally, I think we should really try to have a playing field where at the same time you have common standards. I think that's necessary, that help us also avoid greenwashing. But at the same time, we have keep an environment that's conducive to innovation and to new business models. I think that's a delicate balance, but I think it's a very important one.
Good. And Josh, let me guess, you are looking more at the digital side of the regulatory agenda.
Yes, I think on the digital side we have already made some major movements, but I want to speak about that later on, and maybe jump now a little bit more on the sustainability bit. I think the regulations that have been started now in Europe, they won't go away. What is very interesting, I believe they are the element which means that finance is not anymore perceived as the problem, but part of the answer to the problem, which is a very good point, because I believe if we do not have a massive move of the major finance players, this thing will not be fixed. So, and I think there is this consciousness. And yes, there is, on the one hand, the need for further information, and that is going to be a little bit more of further admin work. For example, I believe that in the future, multinationals, they are going to have an accounting department also for CO2 accounting and for ESG accounting and so on and so on. Now, is that good or bad? It's maybe necessary, that's it.
Can't you give them a software?
For sure there will be, but right now, and funnily enough, there are already plenty of players that try, number one, to track these CO2 logistic chains, for example, but also optimize, give the people the possibility to optimize. There you spend too much. If you do that, you would save. And there you see this dynamic that could create, that this is creating, which I believe is key to come to a more sustainable world. And at the end of the day, and I speak to an economist, is we start to price in the external factors in the game. The cost for cleaning CO2 kind of effects is right now to society. Now it's going to be moved into the space of the capital markets, and it's good that it is not only done via taxes, because that's, of course, a game also, you tax just here. But it's also, I find it very interesting that it is also priced in via capital market prices of shares. Now, all of a sudden, people start to sustain a certain kind of production and so on and so on. And I believe that's really necessary to give a little bit of a shake to the earth, yes.
Good. Let's have a look at the results of our Slido poll, and we see that the European Commission gets a resounding 2/3 vote of approval. I suppose the 33% other are more inclined to follow our American friends. Indeed, that is the main question. How do we make then the different standards converge? Because global operators, and I turn to Joanna like yourself, Blackrock, but of course also Citi or BNP, you operate around the world and you operate in markets that have different standards currently. How do you see this? How can we make these standards converge?
Well, I think that's why I was highlighting ISBE earlier. So it was announced during COP26. And I think we just can't underestimate how important that is. Because before we had a lot of private standard setters, they have converged into, and they are converging on standards, but they're working together as well. And I think that's going to put us in a really, really good position. And it seems that whether you're talking in the States or in Europe or in UK or wherever, Asia, that there's an understanding that we know we're never going to get completely consistent issuer data across the globe, but what we need is a degree of interoperability, and that now looks very much like it's feasible. The reason, and for me, data underpins everything else. It underpins the taxonomy, it underpins the SFDR, all the other pieces of legislation. And the reason that is so crucial to us as a global asset manager, but I think whether you're a regional or national asset manager, is that we look and compare companies within sectors. So if it's a chemical sectors across the globe, or whatever the sector, and the energy transition, the move to net zero, is going to represent a revolution for a lot of the sectors. No sector is going to be untouched. So having that data to be able to analyse the opportunities that certain companies have, the risks of those companies, is really at the core of our work. And I think we're going to see, it's going to enable companies that are developing analytical tools and techniques in terms of looking at the risks and exposures in portfolios. It's going to help investors and it's going to help asset owners really understand the position of a portfolio and understand how that portfolio can change through time as we move more and more to a sort of net zero world. So for us, that getting that global interoperability is key. And I think in Europe, the CSRD there will be interoperability. The CSRD will go further in certain areas, and that's totally and utterly legitimate. So with just as long as we've got that interoperable global base, then we're happy.
Well, let us maybe turn to another topic on which not only this year we have seen quite a lot of changes, but to which we also expect next year to see quite a lot of developments, and that is the future of finance. And Georges, you are in the middle of it with your different fintech startups in which you are involved. What is it that we need to expect in 2022?
Well, let's maybe start with the consumer trends. I mean, and consumer trends, we see clearly still a continuous hyper focus on customer experience. I mean, all turns around the customer experience. Expectation of customers go up and up and up when it comes to this kind of stuff. Then I find it very interesting that now there is a confirmed race of digital-only banks, or I call it very often the phone banking branch. So, and you see these names like N26, Revolut, that serve more than 10 million clients out of one place, just by the means of a phone, which is really fascinating when it comes to cost and operations. Then, the other thing which is very interesting, I believe, and should be integrated in strategies, commercial strategies, is the do-it-yourself mentality that is coming up. People want to do it more and more by themselves. They don't trust anymore the traditional kind of financial services advice that there is around. rightly or wrongly, I don't want to comment, but that's the reality. Then COVID trends. I mean, one has seen that more and more individuals have been exposed to investment experiences, be it via the neo-broker kind of situations or bitcoins or whatsoever. But and that is a good sign for Europe, by the way, because we have a situation, no interest, and nobody invests in equities and so on. So this is creating a social problem. So that people get used to a mentality of investors, I think, is very important. Then a trend, sustainability is going mainstream across all generations. Very often people say, well, these are the youngsters. No, no, no. If you look at the statistics, it goes up to the baby boomers. Everybody starts, of course the extent is different, but everybody starts to put it into the equation. And so, of course, the fintech bits are pretty good placed to serve these waves. And I would also invite the traditional banking really to think more on it, on how to serve these waves. Now, if we look a little bit at the fintech space, there are different kind of trends that are coming up. So what I call the embedded service model is confirmed and growing. What is understood by embedded service model? The embedded service model is the typical kind of platform economy thing. And let me give you some examples. For example, in Germany, you have companies called Penta or Tomorrow. Penta is specialized in SME banking, Tomorrow in sustainable banking. They offer banking service without banking license. So how do they do that? Well, they are connected to this marketplace banks, and one, for example, in this specific case is Solaris, that offers them the license plus the operating model necessary to serve their clients. So this is, of course, a complete new trend. And it doesn't stop with banking. There's also, for example, asset management as a service. There's a Luxembourg fintech called Investre that does exactly the same. End-to-end solution for B2B to C. And the B can either be a regulated or a non-regulated institution. And if non-regulated, the asset as a service gives the regulated bit, which of course is very interesting. The same is, by the way, to insurance as a service. I mean, I can also give you some examples there. Then, of course, looking in 22, I think there's no way around blockchain.
But maybe, if I may interrupt you here, we will come to blockchain in a second, but I would like to jump on what you said about the platformization of the financial industry to ask our second Slido question. And that is very simple, maybe too simple. Will big tech replace financial institutions? And while you are voting, let's switch back and hear Georges about his blockchain.
Yeah. So blockchain, and if we speak about blockchain and financial service, I do not want to speak about cryptocurrencies. Let's speak about DLT applications, so the essence of the blockchain. And blockchain will clearly enhance settlement processes. And what is meant by that? You have the famous double spend problem. What is the double spend problem? Double spend problem is if I make a transaction and I buy a share, it's very important that if my money passes, I'm sure that my share is coming. If not, money is gone and I have no asset. So the delivery versus payment point. Now, in the past, or even still today, there is a complicated clearing system, multi-party clearing system to make this safe. And this is a centralized system. And let me put it, it works, it's safe, but it's slow and expensive. I just make that statement like that, one may debate that. But tomorrow, at the end of the day, thousands of transactions will not anymore be centralized and injected to the settlement process. They will be single settled via the blockchain technology, which makes it extremely fast. So 1,000 transactions are not going to be blocked, but single, extremely fast, cheap, and more agile. And definitely that is going to be a major change, which is now coming, and I'm going to speak also about that later on, because it is now also entering the regulated space. So the blockchain will kind of, and to give this vision, why is it so important? There will be in the future a World Wide Web of certified values. There is certified information in this system, and what is the mechanism to certify this ownership registers is blockchain technology. So I believe that is something will come, and I also wanted to people focus not on cryptocurrency, but focus on DLT technology and what it makes to settlement processes. I think that is on its way. But then let's speak a little bit about crypto. Crypto becomes regulated. That's definitely a new trend. And there's one regulation that in Europe which is called MiCA. MiCA deals with all cryptocurrencies, non-financial tokens, but also stable coins. Now, Is there in the short term something to be expected from that regulatory-wise? Not really, unless the agreement in 22, most probably, on what is going to be the regulation. And then there will be a delay until 24, most probably, to put it in place. So nothing in the short run. There is one that has, in my opinion, been underestimated quite a lot, which is the DLT market infrastructure sandbox regime. So what is important about that? Number one, it is a regulation. That means no transposition, no process. It will be applicable next year. Next year, there's going to be such a sandbox regime. So what is the scope of the sandbox regime? It covers all financial assets that are materialized under crypto technology. So we are speaking for the first time of financial instruments. It will allow to operate a blockchain-based marketplace. So this kind of settlement process and these enhancements behind are now becoming reality. And this marketplace, and that is also new, is going to be open to professional and retail. And that means a marketplace can directly onboard a client. It's like New York Stock Exchange, me, George Bock, is going to the New York Stock Exchange, not working, but now it is possible for me to access a marketplace. And that's why I also speak very often is this regime is a disintermediation by design. The design is made as a disintermediation. So why is it also an important move? It has a EU passport. Meaning I can onboard clients from everywhere once I'm within this regulation. Then it gives also this perfect digital experience. And what does that mean? At the end of the day, such a peer-to-peer platform could allow you to make your investment fund investment on Sunday morning. I mean, this is a marketplace. As long as there's somebody that's selling and there's somebody that's buying, they make a transaction. So you invest when you want and not when the bank is open. I think that is also going to be a major change in paradigm. Then, so it's a large-scale kind of regulatory framework. Each marketplace can have 6 billion of assets traded. 6 billion is already quite a lot. Interesting for Luxembourg, also UCITS can be traded on such a platform. So shares, bonds, UCITS. So in a nutshell, it will be completely changing a little bit the distribution model, which is important for all the young generations, because the young generations, they get not anymore traditionally banked. So either the banks go a little bit more digital, or they go to these kind of marketplaces. And again, there's not an either or. I mean, there's also a lot of things that traditional banks have to give to these marketplaces. So that is an important development. And then the last point, there's also a lot of opinions that this is also going to be of support for the sustainable finance industry, and I share this opinion.
Before we then hear the reaction from the more incumbent part of the industry here, our banking groups or the asset managers, maybe let's have a look at what the audience thinks about the disruption of the distribution model. Well, you can rest assured and go off to a very quiet Christmas holidays, because the big tech will never replace the financial institutions. This certainly would deserve to be discussed in what exactly we mean, but I think it is quite right. They will not replace, they will probably more partner with it. But it would be a pity to lose them completely, because if I may simply quote from how you present your investment solution, it is by saying that the experience of investing should be so positive that first-time retail investors fall in love. Yes. Now, isn't that exactly not exactly what people normally do when using incumbents' services? I don't know what you think about it. Joanna, how does the largest asset manager in the world see this? The view from our audience that big tech will not replace, I think that is something that doesn't surprise you, I suppose.
No, I think I agree with them, partly for the reasons that Yves talked about in terms of the sort of robust, comprehensive regulation of banks, asset managers, insurance companies, etc. But I do think you'll see a lot of hybrid forms, a lot of sort of complementarity, collaboration, as well as the sort of new tech startups, the way that Georges was describing. I learned quite a bit from you, Georges, so thank you for that. The other thing I would say is I wouldn't underestimate when you're talking about incumbents, just how technology sort of rich and how much is being invested into continually upgrading the technology of a lot of incumbents. I don't think you can be an asset management at scale without also almost being a technology company in terms of providing really leading edge investment management and risk management skills, or as George was talking about, the client service experience and operations. So I don't think it's sort of big tech or financial institutions. We collaborate in very, very many ways, but also we have to develop, we have to become almost sort of technology farms in terms of being able to provide our core service to our clients.
Absolutely, and that was the cooperation that I was alluding to rather than the replacing, but maybe a comment from the two banking groups. Ladies first.
Oh, thank you, Nicolas. Yeah, no, I will have to respectfully disagree with you, George, in that I don't think that I don't think today that consumers, don't trust banks, or they don't. And you see in terms of, the numbers, and also, the number of millions of clients that we service around the world. There's no question that, we, as Citi, want our clients to fall in love as well with our services and our products. So I don't think that is a distinction between the startups and the fintech. So there's no question. And I would just end on Joanna's point is we don't see, right, we don't see some of the really exciting fintechs and technology companies that are coming up as competitors. It's very true. Perhaps that was the case 10, 15 years ago when we were really, learning about the technology. We absolutely see them as partners, right? And particularly for us, who, have such a significant global footprint. So, yeah, no, we absolutely do want to have our clients fall in love with us.
Yeah. So it's just, I didn't say the banks, I said financial services advisory. Yes. It's a broader kind of concept.
You can always count, I suppose, on a French bank to make sure that their clients fall in love.
Of course. So what I would say is that we follow very closely all the new ideas and new models coming from fintechs, whether it be fintechs or whether it be big techs or neobanks. And we follow this with a lot of interest and very closely, always trying to understand how our clients' needs and expectations are evolving and how we can best serve them. I think that's really what we do on a daily basis. What we do still strongly believe in offering our clients a mix of channels, physical and digital. Now, this mix is going to evolve over time as clients' needs and expectations evolve. And of course, you see that increasingly clients choose digital channels for their day-to-day needs, and this has accelerated with the crisis. But there are some other circumstances where clients still clearly prefer face-to-face conversations, and this is particularly true when it comes to life-changing decisions. And I think that, so we continue to believe in this mix, and the mix will adjust, but we continue fundamentally to believe in the mix. And I also agree with Yves Mersch in the sense that I don't see how any actor could provide the full range of banking services without falling under the full scope of banking regulation. So I think that's also a key point.
Good, thank you. Before we conclude, let me send out two more general questions to our speakers, and maybe start with Alberta. As we start the new year, what do you see as the biggest challenge in 2022?
I think what do I see as the biggest challenge? And we've actually covered it here on the panel. And it really is in regards to one of the biggest challenges is for the EU is to make that progress or greater progress with regards to capital markets union and banking union, especially as we come out of this COVID crisis. And really the impetus for having strong, efficient capital markets and a transparent banking union becomes ever more critical for the growth, the future growth of this region.
as Joanna has said, it isn't a nice to have anymore, but it is really something that is becoming more and more necessary. And then let me ask you the reverse question. What is the biggest opportunity in 2022?
I find myself in a difficult position because it's I'm recapping, and I hope I do justice, and if I don't, please step in, and as well Joanna, recapping really what my distinguished fellow panelists have already spoken of. I think that one of the biggest opportunities is ESG, right, and the critical role that the financial sector has to play, in really, furthering the global agenda for a net zero economy. And I will cite just two quick examples, Nicolas, of Citi, and really the power that we have along with, governments and along with individuals, is that Citi has committed $1 trillion of sustainable finance investment to 2030. And that has been a commitment where we've actually already started and are investing, and that's really to further, the global objectives with regards to sustainable finance and climate change and climate impact. And the other is that Jane Fraser, our CEO, earlier this year came out stating that Citi will be net zero emissions by 2050. And for those of you who know Citi, we are present in close to 100 countries in the world. We operate in 160 countries in the world. So obviously our impact, our environmental impact, is quite significant. So I think that's a very strong commitment in regards to what the financial sector, the private sector, has a role to play in the opportunities that are there.
Good. Anybody else wants to come in on the challenges and opportunities? Joanna?
Yeah, I think one of the biggest challenges doesn't get so much attention. It's almost like a silent crisis. But it's basically, how do governments improve retirement security for citizens? We've seen savings get higher for certain categories of citizens during COVID, but others have had a really tough time, and fear for one's future sort of increases instability and potential political tensions. So I would say the biggest challenge is trying to think through, I know it's not an EU competence, but national governments, how do you think through the appropriate balance between citizens having an adequate retirement, and how much comes from the government, how much comes from the corporate sector, how much from the individual citizen, because it can't be that all the liability is placed on the individual citizen. So I think that is, COVID has made that more, so maybe a bit less silent, but it's always something that is quite far out there. So it doesn't necessarily always get immediate focus, although we do see a number of governments, for example, the new government in Germany, really getting to grips with it. In terms of opportunity, I'd do the sort of flip side of the coin almost, is it's sort of going back to what Georges was saying, was sort of harnessing technology and harnessing regulation to empower citizens to invest more in markets for their financial futures. Technology can make it far more engaging process. At the moment, you see people often going into banks being given reams and reams of documentation that they're required to have before they can have their full consultation, because of the way that policy works. Now, if we could have, I'm really putting a lot of hope in the retail strategy that the Commission's due to publish next year, so halfway, I think it's in the second half of next year. If that can be more focused on the end consumer, more looking at the solutions that they need rather than the sort of very, very detailed paper-based requirements that you have to fulfill, and more embracing technology, I think that will be better you get better outcomes for more European citizens, and you will also get the channeling of money into the economy will help the COVID recovery as well.
Gentlemen.
I would say challenge and opportunity in the same role. Capital markets have to become more inclusive. They have to become more inclusive. Number one, Joanna, you told about pensions, saving for individuals. But also, I'm a strong believer that capitalism has to become, again, more social adherence. And not only be the game of the big boys and the big girls. So it's really about get again a consensus behind it. And there, for the very first time, the ESG topic can again bring everybody back to finance is something good and I can invest for the good. So that would, if we get that right, I think this will be a major change for society, and which is needed because right now the society drifts away. And then the risk, of course, is that we early in the process would lose trust because of greenwashing and similar. And that's why SFDR and data is important, because the moment, again, people say, well, okay, are you going to lie to me? It's not going to work. So that's, I believe, the biggest challenge, that we rightly get the expectation of the consumers right or investors right, as well as what is possible in the given circumstances.
And to conclude, Yves.
Yeah, to me, it's also the biggest challenge is also the biggest opportunity for me for 2022. And for me, it's around making businesses generally more sustainable. And I think the challenge is that it doesn't turn into a box-ticking exercise. And the opportunity is, if we get this right, I think there will be incredible business opportunities, new business models that will emerge. It's also for us very important to be close to our clients, to help them navigate through what I believe is going to be the biggest societal transformation in a generation. So it's a great opportunity.
Great. Ladies and gentlemen, I hope you will agree with me that this was not only a fascinating and enriching discussion, but also a very positively stimulating one because of the final note on sustainability. And I'm quite certain that you are right, that 2022 will be the year apologies, for sustainability. With this, ladies and gentlemen, thank you very much for joining us. To our panel, Joanna, Alberta, Yves and Georges, thank you very much for sharing your time and your insights with our audience. The same thanks go, of course, also to Yves Mersch for his time with us. Ladies and gentlemen, this concludes our activities for the year 2021, and we look forward to seeing you again in 2022, which will be a year that we will start on not only a different note, but more importantly with a different finance minister here in Luxembourg. Indeed, as many of you will have heard, Pierre Gramegna has announced his decision to resign from his government functions. And please allow me here and now to pay tribute to him for the 8 years not only of very hard work that he put in Luxembourg and traveling around the world to help promote Luxembourg, but also for the excellent cooperation that we at Luxembourg for Finance have had with him across all those 8 years. Not always easy years, but certainly very, very positive years. Pierre leaves his job at the helm of the Luxembourg financial industry, with an industry that is in very, very good shape. The numbers attest to this, and also quite ready to take on the challenges of the future, many of which we discussed here, from digital to sustainable, where Pierre really changed quite a lot here in Luxembourg and made it ready to be taken over by his successor. His successor is Mrs. Yuriko Backes, fellow career diplomat who currently works as the Grand Master of the Grand Ducal House, and she will take over at the beginning of January. We certainly all look forward to having her here on the Focus On series as one of the speakers, and I look forward to working with her. Ladies and gentlemen, we look forward to our next appointment, which is an episode, Josh will like this, on digital capital raising, which will air on January 26th. So we hope that you will join us for that. Don't be afraid if you do not recognize our logo. We will have a new logo which will go public at the beginning of January. And let me conclude also by thanking our sponsors, who again have generously contributed to make this event possible and help us improve the quality of our activities. With this, ladies and gentlemen, let me wish you a happy festive season. All the best for the new year. Stay safe. See you soon.